I'm Mark Kagan and you're listening to the Voice of Insurance podcast, produced in association with Advantage Go, enabling enterprise-scale underwriting through a single pane of glass. Today's guest is making a highly welcome return to the show after a 4-year absence. Since we last spoke, the fortunes of the market have been transformed, her company has matured and floated successfully on the New York Stock Exchange, and has had its insurer financial strength rating upgraded to A by AM Best. All this means that Pina Albo, the CEO of Hamilton Insurance Group, and I had an awful lot to talk about. And our discussion doesn't disappoint. Pina is crystal clear in her vision for Hamilton and how it's planning to make the most of the many opportunities it still sees available in today's marketplace. There's a refreshing directness and lack of ambiguity in Pina's delivery that will leave you in no doubt as to what she thinks of the market issues of today, from the prospects for growth in US casualty reinsurance and the long-term trend to delegated and automated underwriting, all the way through to the best applications of AI. It's a candid chat that's also often fun. So check in for some valuable time in the company of a global insurance leader who's burnishing her credentials and making the wider market sit up and notice her achievements. Enjoy the podcast.
Pina, welcome back to the Voice of Insurance.
Thank you, Mark. This has been a long time coming, as we both know, but I'm very pleased to be back here with you today.
I was just looking back at the episode schedule and it's 2021, so 4 years. I know an awful lot's happened since we last spoke, which is great. And in fact, in the last 4 years, I've probably slightly softened my approach to the beginning part of the podcast. And I've been taken to asking all my guests to run us briefly through their career to date and perhaps ask them how they got into insurance. Just as the opening question, I'm looking back to your podcast in 2021. I didn't ask you that. I just went straight into whatever matters of the day were, probably something to do with the pandemic. So why don't you briefly run us through your career to date, Pina, and tell us how you got into insurance and then obviously how you ended up where you are today?
Sure. I don't know if you know, but I'm a lawyer by background and I practiced law for a few years, but I got a bug when I was practicing law. I really wanted to live in Europe for a while. So I ended up just moving to Europe thinking that as a lawyer with a pretty good degree and a very prominent law firm that I was working from, that I would easily find a job somewhere in Europe. Unfortunately, the only people who would even entertain my CV were insurance and reinsurance companies. So like a lot of other people, I kind of just fell into this industry. However, also like a lot of other people, I didn't leave the industry because I found it so incredibly exciting and fulfilling and multifaceted. So I started my career in reinsurance in Munich at Munich Reinsurance Company, where I stayed for 25 years. And there I had the opportunity of doing multiple things from claims to underwriting to marketing in different areas around the world. And all of that took me eventually to Hamilton Insurance Group, where I took over in January of 2018.
Well, it's quite the education working at Munich Re for that amount of time because you're everywhere. I suppose the problem with being a lawyer is that the laws are different in different countries. And probably, of course, in the States, you've got 50 different jurisdictions as well. So it's kind of even more complicated.
Yeah, that was very true. I guess the helpful thing for me is that many reinsurance companies are global in nature and then have issues. And somehow Canada got lumped into this North America. So if you were Canadian, then you were by default also an American lawyer. So that kind of helped me as well, even though it was not true.
Well, even within the UK, Scotland's a completely different set of laws, and almost the same in Northern Ireland as well. So it's never quite the same. So back into Hamilton, but obviously a lot's changed in the last 4 years. How would you describe Hamilton's overall strategy today? Or perhaps you talk, broker you haven't seen for 5 years. You're describing Hamilton to them. How do you want them to perceive you? How do you want to be known in the market?
Hamilton is a global, diversified specialty insurance and reinsurance company. And to keep it simple, we focus on 4 things in our group. The first is producing a sustainable underwriting profitability. And we do that by being data-driven and having a disciplined underwriting culture. The second thing we focus on is achieving strategic growth. And that is fueled by having 3 complementary underwriting engines within our company. The third thing is tech enablement. That's important to this group. We utilize a combination of proprietary and partner technology to make better decisions, to improve our efficiency, and to digitize our processes. And the fourth thing that we focus on is being a magnet for talent. And that means attracting, developing, and retaining the best of the best and giving them a culture that we describe as being a culture of being in good company, providing them a culture where they have responsibility, accountability, and an ownership mentality. So that's at a high level, but each of our underwriting platforms has a very distinct value proposition. And that's where it becomes important when we're talking to clients and brokers. So if I start with our insurance platforms, Hamilton Global Specialty, which includes our Lloyd's and our Dublin operation, that platform is a leader in specialty and casualty insurance. And they have a long track record of producing results which are profitable and also low in volatility. Our second insurance platform is our most recent one, and that's Hamilton Select. Hamilton Select is our US E&S platform that was launched in 2022. And there we focus on providing niche solutions to small to mid-size, hard to place risks. We've enjoyed a phenomenal market reception on that platform, given the strength of our team, their broker relationships, their responsiveness to the brokers, and also the tailored products that we offer. I'm really excited about the prospects of our US E&S operations because it's an attractive marketplace and because of the reception we've received.
Yeah, that's been a great market because obviously you've been in the right place at the right time because that's been growing so much. You're still seeing good growth prospects there because obviously, we know that perhaps at a very, very macro level, the market's past its peak. And oftentimes in the past, that has meant that E&S might be past its peak, i.e. the admitted lines market might start getting stronger and start retaining more business and that kind of thing. A lot of people I talk to say there's a kind of permanent change there.
No question, we believe that this is not just a cyclical shift to the E&S market, but a structural shift to the E&S market. And although the amount of growth may have slowed down just in recent quarters, the trend line is only in one direction. And that direction is to non-admitted, where you have certain benefits like the freedom of rate and form.
Yeah.
So we're lucky that we're able to capture this market or address this market actually through all three of our platforms, right? So Hamilton Global Specialty accesses the US E&S market, Hamilton Select does, but so does our Bermuda platform. Our Bermuda platform is predominantly reinsurance, but it also writes some specialty insurance classes, those risks that come to Bermuda, which is in the US E&S market. But that Bermuda platform is our last underwriting engine or the third underwriting engine. And that is a global reinsurance platform that has expanded its product offerings over the years and also formed key client relationships that we are able to service. And there too, we've had enormous momentum.
You mentioned about strategic growth there. So where are you seeing the best prospects? It sounds like E&S is still a good prospect. Obviously, it's grown enormously in the last 3 years that you've been in the market, but obviously it looks like there's still decent growth still likely to come from there. Where else are you happiest?
So the benefit of having the hybrid platform that we have with insurance and reinsurance and also this diversified client base is that we can lean in and out where we see opportunities, right? So if I look at Hamilton Re, we've probably seen the most growth recently in casualty reinsurance classes and some specialty reinsurance classes, but that's been driven specifically because of our AM Best upgrade to A, which has really turbocharged the momentum there. At Hamilton Global Specialty, we've seen the most growth opportunity in our specialty insurance classes, for example, personal accident, where rates are still attractive. And if I look at our Hamilton Select, the US E&S platform, we've seen the most growth in general casualty, excess casualty, and small business. And there, because of the positive rate change and our ability to offer this tailored coverage to the risk. So that's where I see the growth.
I mean, that leaning into casualty, obviously, that is a real boon, isn't it? Once you get upgraded to A rather than A minus, then more doors open to you in the casualty world, particularly in casualty reinsurance world. Obviously, that's a market. We've all just come back from Monte Carlo, and it's a market that I couldn't find any real consensus still about whether it's good or whether it's not so good. Presumably, you're cautious about this. It's nice to be offered a lot of new opportunities, but I haven't met anyone yet who said, yippee, I'm kind of jumping with both feet. I don't know. I don't want to put words in your mouth, but what's your attitude to that? Because obviously these doors have been open to you, but how many times are you stepping through?
It's a very interesting question, and you're very right in so many respects, but the answer I'm going to give you is very specific to Hamilton. The ratings upgrade had the most impact for our reinsurance operations and specifically for casualty reinsurance. Now, what you have to understand is a bit of background, right? When I joined Hamilton in 2018, we re-underwrote the entire book of business, and that essentially involved exiting most of the casualty participations that we had. So our growth is in more recent years and also off a very small base. Second, when we defined or redefined our appetite for casualty reinsurance, we came up with a list of targeted clients. That's our key client strategy, where we said these are the best in class underwriters who know how to take rate, who take a lot of risk net, and those are the clients that we've targeted to support. Third, our ability to lean into casualty came at a time where the market was improving and others that you may have spoken to who were perhaps oversized in casualty started backing out. So for us, it was the perfect storm. We were able to lean in and provide support to some clients that we targeted at a time where they needed the support and at a time where the underlying rates have been improving significantly. Now, again, we're not all things to all people. We see a lot more casualty business that we write. We execute this key client strategy where we know who we want to do business with. We take small shares, and then over time, we will increase those shares. So I think our answer to that is very specific to us.
And of course, I suppose it's tied to how those key cedants, those key partners, whether they grow or not as well.
Exactly. And what they're doing with limits, what they're doing with their portfolio, what we're seeing in the information that they provide us. So it's a very bespoke strategy. And we're in actually, I think, a very opportunistic position because we don't have that legacy exposure that many of our peers have to this class.
So yes, that's pretty articulate. So it's not all things to all people, looking for very specific shares with very specific people that you can really trust, because obviously this is all about trust, but you can get a lot of growth that way, can't you?
So our most significant growth in reinsurance has been on casualty re. Again, because of the upgrade, the kinds of clients that we're doing business with, and again, the percentage is based off a small base.
And again, I suppose if you support a client with casualty where there may be a shortage, does it give you a little bit more leverage on some of the other things where there's perhaps overcapacity?
So, yeah, our strategy is a key client strategy, and we like to support people across the board. And being able to offer casualty and specialty and property and the subclasses of that makes us more relevant to those clients and ensures, a very promising future for Hamilton.
But you're still relatively a young company in the grand scheme of things, maturing certainly. But should we think of the Hamilton story, as being complete in terms of what you've wanted to build, the platform that you've wanted to build? Or should we expect to see you continue to expand and move into new platforms and open up new offices, etc.?
So our current platform represents a very strong insurance and reinsurance foundation. What I mean by that is we are in all of the key geographies that we need to be in to access the business that we want to see. And we are able to see global business from those platforms. I mean, Lloyd's gives us global access. Bermuda gives us global access. And we're in the very important market in the US. Our strategy will be to continue adding product to these platforms as we have done historically. And in some cases, we've already expanded. For example, our reinsurance operations have Hamilton Re US, and we had an organic business expansion in creating Hamilton Select, which gave us access to that very broad US E&S market.
Obviously, the most important thing that's happened in the last 4 years is that you've gone out into the public market, you've floated on stock exchange, become a public company. How's that process? Has that changed you in any way? And your day-to-day role? Obviously, now you've got quarterly results and other things to be thinking about.
I'll get to the role in a minute, but so many people have asked me about, wow, going public and what a success. And I will say that going public was really the dot on the I.
Yeah.
The success was in the preparation and everything we did beforehand to get ready to go public. And for us particularly, it involved a multi-year, multi-pronged transformation that touched almost every part of our business, from the talent, from the re-underwriting of the portfolio, from business expansions like I talked to you about, whether it's product or platform. from an acquisition of Pembroke Managing Agency in 2019. That in and of itself was a transformation for us. And all of those things, we addressed legacy exposures, we reduced our expense ratio, we invested in technology. All of that led to us having a much stronger balance sheet, having reduced earnings volatility, having improved profitability and growth prospects. And that led to the successful IPO and also the success in our share price since we did go public.
Ultimately, does the role ever change? Because you always have investors. It's just now they're more public. And then obviously you have analysts and all of the other things. But still, you've always had investors. Everyone has somebody else that they work for ultimately, don't they?
Very true. Having said that, you are right. In addition to keeping our momentum going, I have to answer to a broader group of investors and to analysts and ensure that they understand our story, that they understand our strategy. We also have to be very vigilant. We always have been, but on the governance front, because there are new rules and regulations that we have to follow. So all that has added to our workload. But at the same time, I am so confident and just so passionate about the team that we have that I don't mind the extra workload.
Sounds like it's a positive ultimately, because if you're going to be held to a different standard, that the magnifying glass is going to be of a stronger kind. It's going to look at much more minute detail of what you do. And also, of course, that you're going to be compared directly to any other peers who are also putting out their quarterly results in the same week as you. You know that I suppose it's brutal in that sense. So again, you have to be ready. So it sounds like you've been describing a process of really making sure you're ready before you go.
Exactly. And a lot goes into it. For us, there was the entire transformation of our business before. It's an 18-month process to prepare to go public if you want to be really ready. And I was just honestly so grateful to have the benefit of an incredibly devoted, hardworking team of experts that helped us bring this over the line. So believe me, when I rang that bell, I rang the hell out of that bell.
It's just not the sort of thing you're going to do that often in your career, even if you're the most experienced executive of all time. So you're going to make the most of it, I think.
You know, if you had asked me 10 years ago, Pina, do you plan to be on the podium of the New York Stock Exchange? I would have laughed. But right now, as I speak to you, I have this poster behind me, which is Hamilton banner on the front of the New York Stock Exchange with the entire team that made it possible. Honestly, that's inspiring.
Back to more mundane things. We've seen a bit of an uptick in M&A. Do you think that's a logical thing to start seeing? I suppose, you know, when you pick up the average sort of insurance and reinsurance report saying we're past the peak, does it sound logical to you?
Look, are we at an all-time high in the market? My answer is no. Are we still in an attractive market in many lines of business? My answer there is yes. And therefore, I still think there is opportunity to grow organically. We have seen some M&A recently on the carrier side. I mean, on the broker side, it's been happening for a number of years. But on the carrier side, we've seen some M&A. I think that right now that's more bespoke in nature. I don't think the industry is at a point now where growth is so difficult to come by that M&A is your only strategic lever.
Yes, it's certainly some of the more recent M&As, perhaps it's more sort of timing related. There are things that we all knew that they might have to change owner at some point, and now seems as good a time as any. Well, that's good to hear that, i.e. that most incumbent players have all got plenty of fish to fry, plenty of stuff to be getting on with without having to think about resorting to M&A.
Correct.
I suppose one thing you do have, obviously, is that, one, you've done transformational M&A and you've made a success of it, and now you have a currency. So one would presume that we should see you as an acquirer rather than the seller if this phase ever comes upon us.
So look, we have enjoyed double-digit growth for the last 5 years. Certainly it's come down as the market comes down, and I would expect that. And I quite frankly respect that because that shows that we are managing the cycle. Again, we still see the ability to grow organically in this market, given the hybrid platform and the diversity of product that we have. As you mentioned, we have done a very successful acquisition in the past. And while I'm still open to opportunities, I will tell you our bar is pretty high, and it has to be something that furthers our overall strategy. So I'll leave it at that.
Something that you don't have already, for example, for a start, that kind of thing.
Or that adds to or bolsters the platforms that we already have. It has to fit within this specialty insurance and reinsurance franchise that we're building.
Obviously, you've had that fantastic growth you were talking about within Hamilton Select and the E&S market. Parallel to that, and sort of in tandem with that in many ways, has been a similar amount of growth in the amount of business distributed through MGAs, obviously, particularly in the US market, in that specialist small business market, in the E&S market, not all in the EMS, obviously, probably about half of it's still in the admitted lines. But that's also been a great engine of growth. What's your strategy dealing with all those MGAs and those hybrid fronting carriers and all the other byproduct of this boom we've had in the last 5 years?
Yeah, you're very right to point that out. I think, as a general rule, our preference is to do our own underwriting because we believe in ourselves. Having said that, we've seen this dynamic, but we only support a very limited number of MGAs within our group. And that's done predominantly through our Hamilton Global Specialty operations, which includes Lloyd's, which is traditionally a market that entertains this kind of delegated underwriting. We evaluate things that come our way, like you said, MGAs with these hybrid fronting carriers come to us. But we are not jumping on that bandwagon immediately, just as we didn't jump, quite frankly, on the bandwagon for intellectual property when that was the new flavor of ice cream. We know where that ended up. I still think we have some concern about the longevity of some of these arrangements while they are active now. Just how will they perform when claims start coming through, and who's going to be handling those claims in these scenarios? So while we see that, these facilities, and we take a look at them, at the end of the day, we still think there's enough premium in the market and enough players who want to deal with entities who are in this business for a living and who are in this business for the long term.
So it sounds like it better be something special, someone who's really got a hook into a class of business that you don't even know where to start to understand, or they've got access to business that you just couldn't get yourselves, and you've got to take your hats off to them and say, actually, this is really good. And also that you really believe they've got that service offering totally under control, and that they're not just adding blind amount of expense. You're sitting at the other end of that chain, and they want to make sure that your net premium is going to be profitable as well.
Yes, and a track record.
Excellent. No, well, that's good. But if you did do it, then you'd be a good partner because you'd have done all the diligence you possibly could.
Correct.
Another thing that probably was more fashionable, let's say 8-9 years ago, having an ILS platform was something that sort of everybody felt they ought to have. You've got yours, but is it fair of me to say it doesn't look like, just sitting from the outside, it doesn't look like it's a big priority strategically for you?
Well, the short answer to that question would be no, you would not be correct. The longer answer to that question is that Ada Re has been a very strategic part of the Hamilton family. It's allowed us, if I look at the property cat space, it's allowed us to service a very broad need of our clients without placing that business on our balance sheet. So that allows us to say, we can service this part of your business on this platform, but this is the part of the business we want on our platform. So it allows us, what you said earlier, to get more access to business because we can service it all.
Something else that is really gaining traction and becoming something that people are looking at has been the advent, particularly in the London market, but it's becoming more global as well now. The idea of smart, follow, algorithmic, facilitized, call it what you will, and they're all slightly different flavors of the same thing, underwriting. Is that something that you're keeping an eye on? Again, what you already said about MGAs, obviously it sounds like you like to underwrite your own business and rather than follow or sort of take a kind of tracker approach to a market. But what are your thoughts on it?
I think my thoughts would be the same as I would have on the MGA space. We are watching that space. We are analyzing that space. Some initial indications are that some of these platforms are promising. I think right now I'm going to wait and see, continue to assess, and make a decision when we have a little bit more information.
Fair answer. AI, I mean, obviously, as you mentioned at the beginning, as tech being one of your pillars, and I think it's very credible given the original partners and the relationship we've had with Two Sigma. It's something that I think that anyone that was discerning about the industry would know that you have pretty good tech and good investment side of the business as well. Now, of course, everyone's talking about AI. We couldn't be sitting in 2025 and not talk about AI. What are you finding the best implementations? Obviously, you've got some very smart people in the room with you and partnering with you and helping you on this. What have the best implementations been so far?
So I think in general, we do see promise from an AI and Gen AI, particularly around the area of automating tasks, extracting data, summarizing data, assisting and making yourself more efficient. I think that most companies are looking at or piloting the one or the other initiative, as we are as well. But I also think it's important, like, you can talk about all this hype, but it's important to remember a couple of things. Number one is, what are your priorities, right? You've got to make sure that your AI strategy is completely aligned with your business strategy. Otherwise, you can get lost in possibilities and, quite frankly, also in cost. So it's very important to prioritize. It's important to bring your people along, make sure that they are part of the journey as opposed to fearing what's coming for them. And then I think the third thing that we look at as well is, what are potential pitfalls that we have to think about? Is the data going into this AI correct? How mature are the models? Can we trust the outcomes 100%? So there's still a lot of things we have to be vigilant about here. And at Hamilton, as we are expanding the use of this technology in our operations, we are very cognizant of those three essential areas. Right now, we're using AI already to summarize very long, complex documents and analyze, synthesize, and compare. That's incredibly helpful for efficiency purposes. We're also using it in Hamilton Select, quite frankly, for submission ingestion, right? To make sure that we're getting through this volume very quickly. We've also identified a number of other use cases. I'm going to say most of them are around underwriting and claims handling. Those are the majority of our use cases, and they're mostly for efficiency purposes, not for decision making. I think we're a little bit far away from that yet, or should be at least.
With claims, I always think it's interesting because we so often overlook claims. We always get excited about GWP rather than necessarily claims flowing out the other way. And of course, whoever met a claim that didn't produce a ton of documentation that was all quite complicated and needed summarizing?
Exactly. Summarizing, prioritizing, etc. So we're looking at a use case right now in claims that have been prioritized in our operation. And the initial indications are this is going to be a very helpful tool.
That kind of triaging and prioritizing, saying, hey, you've only got 10 minutes left today. It's time to go home. But before you go, this is one thing I think, if you've got time, just look at this one as opposed to those other 8 ones that are sitting in your inbox.
That's a very, very important finding, because even when you're looking at risks coming in, what are the ones we hit on more often? So if AI can help you identify that, then you're going to have more success in binding business than you would otherwise, right? So we really think there's a lot of promise in this tool as we continue to roll it out.
This broker in that state, in that territory, in this class, we seem to have a really great affinity with each other. We've got good appetite for them. They like us. And if we get the quote back quickly, they'll probably get a firm order.
Precisely that.
Pina, I've really enjoyed talking to you. Time's flown by and I've got to the end of all my questions. Do you think there's anything that I should have asked you that I haven't asked you yet?
No, I think it's been a great conversation. I hope that you had the opportunity to understand Hamilton and the successful journey that we've been on. Again, I think we talked about the state of the industry and, of course, just the views that it's not at its all-time high. But at the end of the day, it's still attractive, and it's been attractive for some time, actually. So I still look at the future very, very brightly, partially because of where we are as an organization and the opportunities I see for us specifically, also because of the team and the culture that we have.
Yes, the thing about communications is internally within a business, everyone knows what this is and what that is. And you end up abbreviating everything and everybody knows everything. And of course, it's only when you go outside that you didn't realize that people didn't necessarily know everything about you that you already know. So forgive me sometimes for asking questions that might seem slightly obtuse, but it's all about perception. Thanks for correcting me.
I couldn't agree more. And therefore, I like telling the Hamilton story. It's a great story to tell. And I really, really appreciate the opportunity of talking to you today, Mark.
Yeah. And obviously, as a public company, you do have to tell it more often.
Exactly. So you've just helped me.
That's great. No, but obviously I'll be looking out every quarter and, every investor conference and everything else. As a journalist, you can't ask for any more where there's more information, more transparency. That's only a good thing as far as I'm concerned.
I agree. And I hope it's not going to be another 4 years till we have a chance to sit down again and have a comp.
I think not. It was great. I could see why it was a delay, because I think all that time preparing for the IPO is a bit of an intense experience. You probably didn't really want to be on a podcast while you were doing that.
Yeah, I probably prioritized a few other things. Yes.
Excellent, Pina. Thank you so much for coming on the show. And yes, it will be less than 4 years when we're talking again on the Voice of Insurance. Thanks so much.
Thank you, Mark. Enjoyed being here today.
Well, I hope you enjoyed today's episode. If you did, don't forget to subscribe or leave a like or a review or recommendation on whatever podcast platform you used to access this program. These really help get the word out. Before we go, just a quick reminder that advertising slots are available here and in other places in the Voice of Insurance podcasts. Podcasting is the fastest growing medium and attracts a high quality audience of key decision makers. It's also an intimate medium where you, the listener, are right in the room with me and the interview subjects. Needless to say, that means it's a great way of getting your message out directly to an audience because you know you've got their full attention. It's also very cost effective. So get in touch with Mark at thevoiceofinsurance.com to find out how you could be speaking directly to the industry. The Voice of Insurance podcast is produced in association with Advantage Go, enabling enterprise-scale underwriting through a single pane of glass. Voice of Insurance is produced by me, Mark Gagan. Music was written by Anna Gagan and produced by Carlos Gagan. Check out more podcasts and written comment pieces at www.thevoiceofinsurance.com.